So the conversation is around the equities play in 2018. We've seen a very decent year, 2017, so we can as well pop the champagne as far as the market is concerned. But there are a few concerns about 2018. Let's begin to track down the year and track up the next year. Obiani Junsofo, one of the research analyst team at AfriInvest, is here this morning to start this conversation for us. Good morning.
Good morning, boss.
It's good to see you.
Good to see you, too, sir.
Are you guys winding down already?
Well, the year is coming to an end.
So you're winding down portfolio?
Yeah.
Are you? So as you're winding down the year, I say it's been a very decent year. Do you agree?
Well, yes, we quite agree in terms of the fixed income as well as the equities market. I mean, investors that played in both segments of the market got very impressive returns so far in the year.
In terms of equities, who are the big players for the year?
Well, the big players, you have to give it to the banking stocks. I mean, on a year-to-date, they've outperformed the benchmark index as well as all other indices. I mean, this is not far-fetched, given their resilience that they've able to prove over the years. So you have to definitely give it to the banking stocks.
I'll give it to the banking stocks.
Yeah.
Okay. What are the key fundamentals of for the equities market in the outgoing year?
Well, okay. Looking at the broad overview of the equities market, for the Nigerian equities market, is one to note that it's a market heavily driven by the foreign investors. I mean, they are the most dominant players in the market, given the risk-averse nature of the local investors. So even when you look at these local investors and look at the big players, such as the institutions, I mean, the pension firms and the likes, they sort of adopt a passive strategy. I mean, they would just play across the fixed income market and get decent returns there. They're not much active in the equities market. So barring that, there is no factor which may deter foreign investors from keep playing into the equities market in 2018. We ought to see a more vibrant market.
In terms of the economy, basically speaking, do investors really care about what happens in at the macroeconomic space to decide whether to play in a particular stock market? Well,
definitely you have to consider all factors. Looking at the macro, it sort of tells you what exactly is going to happen in some specific sectors. So as the economy is expanding, I mean, we are a highly consuming nation. So you look at consumer goods sector, you ought to see some sort of trickle-down effect in that part of the sector. So the macro is sort of like tells you, I mean, inflation, you're looking at FX. Look at the banks now. FX was a major challenge to them in 2016. You also look at cutting across all other sectors due to the fact that some of our raw materials are sort of imported, although that we see some consumer goods companies they are trying to switch towards local raw materials in order to stay away from the volatilities in the FX market. But then again, you look at FX, it's a major determinant. So investors that are looking to key into this market, you have to first look at the macro story. I mean, what is it telling before you decide to invest in any particular sector?
So FX, if we try to apportion percentages, so we say FX was the big story for the market, for the equities rally in 2017. What percentage would you attribute to that?
Well, it's a huge determining factor.
70, 80?
Like I said, I would say it's one of the major dominant factor, because in terms of foreign players who are the major drivers of this market, I mean, they are looking at FX. Although the fact that the FX depreciated and it sort of made our stocks attractive, but then diving into the local market, how do they get back their funds back? They've made so and so returns. How do we get this monies back? So this is a factor that they have to look at. Then you look at these companies. I mean, majority, industrial goods, consumer goods, I mean, majority of their inputs are sourced abroad. So, I mean, if the Naira is depreciating, these are higher costs, going to pressure the margins and drop down profitability. Investors will not be willing to invest in this sort of companies.
So FX story was good, so I'm going to ascribe 80%.
Well, Yeah, possible.
Possible. Okay.
Yeah.
Then we have about the macroeconomy about 20%, and that takes us to the fundamentals of the companies within the market. So if we take out the banks,
yeah.
and we're dealing, we take out the banks and insurance, then we're dealing with agriculture, consumer goods, industrial goods, and we're seeing first quarter, second quarter, third quarter earnings. So the macroeconomic story, which is between 10 to 20% of the entire sentiments that drove the market this year and would likely be major considerations for the new year, we can't discount this as well. That means from the policy side of things, yeah. Do you think the fiscal authorities seem to have their fingers on a few buttons that investors are considering when they look at the numbers that the companies are pushing out?
Okay. Before I answer that, I think it's bound to note that before I dive into the individual sectors, that what's basically on a fundamental basis drives investors into keying into any of these stocks going forward in 2018 would be positive earnings growth. I mean, you look at over the years, 2016 was a tough year for most of these companies. How were they able to fare? So they are looking at stability, consistency. How consistent have the profitability of these companies been? And not just making profits. I mean, you look at the margins. How is the gross profit margin? How is their profit margin? I mean, it's definitely something you have to look at. You compare it to the industry before you sort of like dive into any of this stuff. Also, you look at dividend history, which is one of the ways investors can sort of get back returns. You're looking at capital appreciation or dividend history. For a company to be able to pay dividends, they have to be profitable, except they have a negative retained earnings, whereby they just put it back there. So for a company to be able to pay dividends, they have to be profitable. So in order to be profitable, you have to look at what actually drives revenue and how they've been able to keep their cost pressures low, which you look at all the other factors that goes into that.
If we look at 2015, 2016, we've seen a number of companies in our space raise prices.
Yeah.
But despite that, they still were able to make decent gross revenue all the way to the bottom line, to price, to earnings per share.
Yeah, so you look at the industrial goods, which is one of those companies. Yeah. Some of the companies that they also raise prices. So they needed to adjust for the